Every year, Canadian freelancers leave hundreds, sometimes thousands of dollars on the table at tax time. Not because they're doing anything wrong, because nobody told them these expenses were deductible in the first place. Today we're going through 5 deductions that freelancers and self-employed Canadians commonly miss. All of them completely legitimate, all of them claimed on your T2125, and all of them reducing the amount of income the CRA taxes you on. Quick reminder of how this works. As a self-employed Canadian, you report your business income and expenses on Form T2125, Statement of Business or Professional Activities. The CRA takes your total revenue, subtracts your allowable expenses, and taxes you on what's left, your net business income. Every dollar of legitimate expense you claim is a dollar that doesn't get taxed. So missing even a few of these deductions every year adds up to real money over time. Let's close those leaks, starting with the one most freelancers get wrong before they even start. Deduction number 1, your home office. If you work from home, and most freelancers do, you can deduct a portion of your home expenses as a business cost. But there's a rule that trips a lot of people up. To qualify, your home office must either be your principal place of business, meaning you do the majority of your work there, or it must be a space you use exclusively and regularly to meet clients. A dedicated desk in a room you also use for something else doesn't qualify. A dedicated room that you use primarily for work does. Once you qualify, here's how you calculate the deduction. Divide the square footage of your office by the total square footage of your home. That percentage is applied to your eligible home expenses. Things like rent, utilities, home insurance, and maintenance costs. One important limit: you cannot use home office expenses to create or increase a business loss. If your business income is low that year, your unused home office deduction carries forward. It doesn't disappear. If your business income is low that year, your unused home office deduction carries forward. It doesn't disappear. And one correction that catches people off guard: the flat rate method the CRA offered during COVID ended after 2022. For 2026 and beyond, only the detailed method applies, meaning you need to calculate your actual percentage and track your real expenses. No more $2 per day shortcut. Deduction number 2, your phone and internet bill. If you use your phone or internet connection for business, and almost every freelancer does, you can deduct the business use portion of those monthly bills. The key word is portion. You can't claim 100% unless you use them exclusively for business, which is rarely the case. Be reasonable and consistent with your estimate. If you use your phone roughly 60% for business, client calls, emails, project management apps, claim 60%. Keep a month or 2 of actual bills in your records to support the claim if the CRA ever asks. This goes under telephone and utilities on your T2125. It's one of the most overlooked lines on the form, and for most freelancers, it adds up to a few $100s a year in real deductions. Deduction number 3, professional development. Any money you spend to maintain or improve skills directly related to your freelance business is deductible. Online courses, industry books, webinars, workshops, professional memberships, subscriptions to trade publications. All of it qualifies, as long as the connection to your business is clear. The test the CRA applies is straightforward. Does this expense help you earn business income? A graphic designer taking an Adobe course, yes. That same designer taking a cooking class. No, even if they claim it helps them think creatively. The practical tip here, when you buy a course or book, write the business purpose on the receipt right away. UX design skills for client projects is much stronger documentation than a bare Amazon receipt 6 months later at tax time. Deduction number 4, bank fees and payment processing fees. This one surprises a lot of freelancers because it feels too small to bother with, but it adds up fast. Monthly business account fees, e-transfer fees, and especially payment processing fees from platforms like Stripe, PayPal, or Square are all fully deductible business expenses. If you're processing $5,000 a month in client payments at a standard 2.9% processing rate, that's roughly $1,740 a year in fees alone. Fully deductible, gone from your taxable income. These go under bank charges on your T2125. Your bank statements are usually enough documentation here. These are easy expenses to support because they show up clearly in your records every month, without any extra effort on your part. Deduction number 5, software subscriptions and digital tools. If you're paying monthly or annually for tools you use to run your freelance business, project management apps, accounting software, cloud storage, design tools, communication platforms, those costs are fully deductible as current business expenses. Important distinction: the laptop itself is a capital expense. It gets deducted over several years through capital cost allowance. But the software you run on that laptop? That's a current expense, deductible in full in the year you pay for it. Go through your credit card statements right now. You might be surprised how many monthly charges are quietly sitting there that you've never claimed. Before we recap, one rule that applies to every single deduction we just covered: you need receipts, not credit card statements, actual receipts. The CRA does not consider a bank or credit card statement sufficient documentation on its own. It shows that a purchase was made, but not what was purchased or why. A valid receipt must show the vendor name, the date, a description of what you bought, the total amount, and the GST/HST paid. The practical habit that saves freelancers the most headache: photograph or scan every receipt the moment you get it and file it by month. The CRA can ask for receipts up to 3 years after your assessment. A shoebox of crumpled paper is not a filing system. A simple folder structure: year, then month, then category. 15 seconds per receipt now versus hours of searching later. Build the habit once, and tax time stops being a crisis every year. Let's recap. Number 1, home office, using the detailed method calculated by square footage. Number 2, phone and internet, the business use portion. Number 3, professional development, courses, books, memberships directly tied to your work. Number 4, bank fees and payment processing, including Stripe, PayPal, and similar platforms. Number 5, software and digital tools, current expenses, deductible in full this year. All 5 of these go on your T2125. All 5 are legitimate. And all 5 are things the CRA expects you to claim. They're not aggressive moves, they're just good bookkeeping. If this video saved you money, subscribe. Next week, we're covering the T2125 itself, line by line, in plain language. See you then.